Other than that, we're seeing agentic AI now becoming the new growth area. AI agents are now able to help a lot of enterprise, a lot of users to do work such as do search, compare, and also complete a task such as purchasing, making decisions, and making companies and marketing teams even smarter, able to come up with better results. And this is where we believe that the opportunities in AI is still being underestimated. So overall, we think there are more opportunities, stronger opportunities than the underlying risks. The Neuberger Berman Next Generation Connectivity Fund is a global tech portfolio, but it's differentiated because we invest in the next generation technology companies, especially the ones involved in AI and connectivity. And what makes us very unique is that we are a global investor of technology based out of Asia. We have teams here in Hong Kong, Taiwan, Japan, and also China. And we have also teams in the US based out of New York. Combined, we are a truly global team. And our uniqueness comes from our footprint on the ground boots in Asia. Because as you know, if you think about AI companies, if you think about semiconductor companies, it's all in Asia. All the semiconductor manufacturing, all companies that manufactures for NVIDIA, for example, for AMD, for example, they're all based out of Asia, whether it's Taiwan, Japan, South Korea, and so on. So we have the firsthand information about what's happening in the technology space. Combining that with our strong financial analysis on single stocks, we are bottom-up stock pickers. So this allows us to be able to generate alpha stronger than most of our peers. And this is, a very truly unique global tech strategy as we focus on the next generation of AI and connectivity. Yeah, recently the market has some concerns about the increasing investments in AI, whether the return on investments are going to be able to cover the massive investments. We think that overall AI is still in the early phase of infrastructure deployment to eventually have an AI-driven economy. We need a lot of support from data center infrastructure, AI chips, data centers that are connected with high-speed network. AI is going to transform the whole industry, the entire economy. But to do that, we even need a lot of power, electricity, to power up the AI data centers. Over the next few years, infrastructure build out is going to be massive. And this is what the US tech giants are doing. And we're pretty much seeing the same thing across the world, whether it's in the US or in Asia or in Europe. And this is a massive investment. Now, the return on investments in artificial intelligence is already being seen. For example, the US tech giants are already monetizing on artificial intelligence through advertising, through search, through many other types of tools. I think over the next few years, the investment focus remains on the infrastructure, data center, powering of data center, and these will continue to dominate the strong earnings growth that we're seeing in the supply chain. We are not too concerned about the heavy investments. These heavy investments are all coming from free cash flows from many of these very large tech companies. Yes, the free cash flows will continue to fund all these investments over the next few years, but returns or the stronger returns are already being seen at many hyperscalers. We're starting to see that Google, Meta are already monetizing stronger based on their AI technologies. So we're very excited about all these strong investments into AI infrastructure. Yes, we have seen the sell-off of the software and internet sector over the last few months. This is because there is some disruption happening in the value chain. AI companies or AI model companies are coming up with new AI models that could disrupt the existing software as a services business models. Hence, we have seen a lot of software stocks, internet stocks, being sold off. And these are, pretty massive sell-off that we've seen in the market. This, we believe, will continue for some time because valuations for many software companies, for many internet companies, remains quite elevated, while the disruption from AI is something that potentially could happen. As investors in the global tech space, we prefer not to catch the falling knife. We have been reducing exposure in software. We have been reducing exposure in internet names. We have focused more on the mega caps, which are more stable. Whereas for software companies, we are not chasing, we're not ready to add back yet. We are still more focused on AI infrastructure, hardware, and semiconductors and related industries. We believe at some point, valuations for these software internet companies would come to a very attractive level, but we're not there yet. So we are not eager to chase any of these pullbacks at the moment. Yes, when it comes to the competition, more like the Olympics competition in AI, it is really between the US and China, the two powerhouse of technology, especially in artificial intelligence, robotics, and so on. We believe that the US is ahead in terms of developing the next generation high performance AI models and also making a big push in agentic AI. Agentic AI is what is going to disrupt a lot of the software as a services business model. And we believe a lot of US companies are well ahead in terms of developing all these most advanced AI models, infrastructure, and so on. China is taking a very different approach. China is taking a more cost-efficient approach. China, because of the limitation that they have in semiconductors, in the most advanced semiconductor chips, China is taking a different route. They're focusing on developing AI in a much more cost-effective fashion. This gives China, especially the Chinese internet companies, the software and the AI models company, an advantage because they are spending a lot less compared to US companies. While they're spending less, the performance of their AI models are actually pretty good. And this is an area where the Chinese companies are excelling and they're able to deliver their AI technologies in many emerging markets in a very cost-effective manner. And this is important because emerging markets have huge populations, but at the same time, they have an aging population. AI will become something that will drive productivity. And the race between the US and China AI will be something that will be accelerating over the next few years. Even though the competition sounds very intense, there are still a lot of investment opportunities. The investment opportunities here are the common choke points, whether it's the US or Chinese AI companies, they face the same common bottlenecks or the common choke points. For example, semiconductors, high-speed networking, thermal and power. Whether you're a US company or a Chinese company, you face these same common choke points. And we believe these common choke points are where the investment opportunities are because these are having strong pricing power and a lot of growth opportunities. So here we really focus on what is the common choke points and what is the growth opportunities that we can tap into. So the US-China AI Olympics is really a very exciting opportunity for us to tap into. Yeah, I'll start with the risk. Obviously, AI as a theme has grown a lot over the last 2.5 years. I think in a lot of investors' mind, the risk is what if AI capex or investment slows down? What if AI is, not generating enough return on investments? We believe these will continue to drive market volatility. But what is important to note here is that we see actually more opportunities than risk. Why? Because as I mentioned, there is a Olympics race between US and China and the rest of the world in developing AI. And number two, even if we see that the AI investments are skyrocketing, they are still limited by the available capacity, whether it's electricity capacity or semiconductor chip capacity. It is still limited. So it is actually not going to become another internet bubble like what we saw 25 years ago. We believe these are opportunities, the common choke points that I just mentioned. The infrastructure rollout will require more semiconductor chips, especially in memory semiconductor chips. These are very strong growth opportunities. And we are seeing very strong demand for optical networking. Data centers requires a lot of optical networking to connect the GPU and the CPU chips together. And many data centers that have been built needs to be connected with optical networking. And there is now a massive shortage of these components. And this is where another growth opportunity is. Other than that, we're seeing agentic AI now becoming the new growth area. AI agents are now able to help a lot of enterprise, a lot of users to do work such as do search, compare, and also complete a task such as purchasing, making decisions, and making companies and marketing teams even smarter, able to come up with better results. And this is where we believe that the opportunities in AI is still being underestimated. So overall, we think there are more opportunities, stronger opportunities than the underlying risks.